Hello and welcome back to Alpha Ambition. So the topic of today's video is very interesting. Internet is filled with debates over which asset between gold and Bitcoin is a better bet against, uncertain times or market crashes, or which is a better asset in terms of the store of value. While gold has been around for centuries and centuries, and it's quite literally a gold standard in terms of store of wealth or value, all of that might actually change in the future. Well, quite frankly, it's already changing. So stick till the end to know whether it's safe anymore to only have gold in your portfolio to provide that stability, to provide that defense against, bad financial times. Or should you be on the opposite extreme end of the spectrum, which is completely replace gold with Bitcoin in your portfolio, while Bitcoin being the ultimate and the OG cryptocurrency. And that's exactly what we're going to be discussing in today's video. So first of all, do not forget to like, share and subscribe and watch till the end because there's a lot of good information and value coming to you. With inflation on the rise and geopolitical tensions on high temperature, there's a lot to be considered as to which asset one should be adding to its portfolio to defend stock market uncertainties. But to understand whether Bitcoin really trumps the gold or Bitcoin, comes on top of gold, we need to do some quick and easy analysis, which I'm going to be covering in two simple points. So the point number one is understanding which asset is a better store of value or which asset is a better store of wealth. It is a no-brainer that gold has been an unbeatable store of value or store of wealth for thousands of years. The fact that gold has survived for thousands and thousands of years only says a lot about its dominance and, people's trust in its value. And obviously there's an old saying that own gold and hope that it doesn't go up, because when gold goes up, everything else comes down. So essentially the yellow metal has not only survived in these financial bad times or financial crisis, it has thrived in it. So we basically see an opposite trend to the financial markets in gold, and that is why people add gold to their portfolio, because when financial markets are down, gold basically provides that safety net. It operates opposite to the financial markets. Now talking about Bitcoin has only been around since 2009. It was actually created on the heels of the financial crisis of 2008 and 2009. Sure, Bitcoin doesn't have the long proven track record of gold, but Bitcoin became the fastest assets in the entire history of asset classes to go from $0 to $1 trillion in market size and valuation. So one could comfortably say that despite the volatility, Bitcoin has been a store of value for the last so many years. Now to further substantiate it, let's look at the chart performance of gold versus the stock market. Now looking at the chart performance of gold, which is in orange, versus stock market, which is Dow Jones, one of the largest North American stock indexes, which is in blue, that gold's relationship with stock market has been inverse. Now right here during the tech bubble 2000 crash, we see that the stock market starts to slump, and that's exactly where gold starts to pick up. Now it again goes on, and we are basically the second gray region here is the 2008-2009 financial crisis. And here we can again see the moment stocks fall, the gold basically outshines the market and keeps on doing it because there's always momentum in its activity. And quite literally, looking at right now, this is where we are seeing the slump in the stock market, and at the same time we can see appreciation in the trend of gold. Now let's also look at the stock performance of Bitcoin and see how it has performed in the last so many years. Now looking at the stock performance of Bitcoin, it is just one tremendous run. In the last 7 years or so, Bitcoin has appreciated about 12,260%. Although there have been periods of Bitcoin being very volatile and being very fluctuating, overall, if you're a long-term investor and you've sort of kept faith in Bitcoin, the amount of returns that Bitcoin has provided is just mind-boggling. And it is about 22% high from the last 3 months low. So it looks like that Bitcoin is perhaps forming a massive bullish pattern here. And if the king of the crypto stands its ground, it could very well give gold a run for its money. Now that we've looked at which asset is a better store of value, let's look at another key point of differentiation or comparison. which asset is more scarce. Now, why are we comparing the scarcity of the assets? This is very important because the more scarce an asset is and it's valuable, the greater going to be the value of that asset. For example, diamond is a scarce element, and the fact that diamond is valuable to humankind, the scarcity basically drives the price of the diamond. We know that both gold and Bitcoin are scarce. So one point of clarification, if you don't know why Bitcoin is scarce, is because the supply of the Bitcoin is limited. It's not a money-making machine like your dollars, where Federal Reserve can just print money and just keep pumping money into the financial systems. Bitcoin's supply in the financial markets is only limited to 21 million Bitcoins. So okay, we know both gold and Bitcoin are scarce, but let's try and understand which one is harder to come by. Let's look at a very key metric which is commonly used to understand any materials or any element's scarcity, which is the S2F ratio, where S is the total supply of that element of that commodity which is already present or which has already been mined, and F is the amount of new supply which has been mined in the last 1 year. So just to put it in easy terms, the higher the value of S2F ratio means that asset is more scarce. So I've done the legwork for you and I know the S2F values for both Bitcoin and gold, and I'm going to share with you. So the S2F value for Bitcoin is about 57 years and the S2F value for gold is about 58 years. So now that we can see that they're both neck to neck, which means that they're kind of equally scarce. So finally, let's ask this question. Which is the better asset here? Bitcoin in comparison to gold has a much smaller market size. So in theory, the potential upside of Bitcoin is just tremendous. So while gold is this fierce contender to provide a safety net for your stock portfolio, I wouldn't be surprised if Bitcoin gives a knockout blow to gold in the coming future. So while a lot of things look good with Bitcoin, it will be a foolish decision to completely replace gold with Bitcoin. So what you can instead do is, whatever proportion of your portfolio you have set aside for gold, you can basically break that down into gold and now Bitcoin as well. And over the period of next few years, as you see Bitcoin showing strength, what you can do is you can perhaps slowly and steadily replace that portion of gold with Bitcoin. But do not ever rely on just one asset. Always have diversification in any part or any segment of your portfolio. So that's all for today's video, guys. I hope you like the analysis. I hope you like the argument, and please share with me your thoughts and comments or questions in the comment section below. And again, do not forget to like, share and subscribe. I'll see you in the next video, and in the meantime, take very good care of yourself. Thanks and bye-bye.